Hello, I'm Peter Towers, founder and managing director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS Accountants Minute podcast. This week, we're going to examine the latest Accountants Minute article, Build Successful SMEs from the Ground Up. That's what we should be doing as accountants and bookkeepers and business advisors. But do we? Do we really help our clients grow from the ground up? Success is rarely accidental in business. Sometimes we might think it is, but if you dig into what's going on in that organisation, you'll find that someone has set up a range of systems to help that client SME business operate effectively. They've been mentored and trained to understand how businesses operate. And I believe that's the infrastructure that is behind virtually all successful businesses. They're built on financial discipline, operational clarity, with a firm grip on the fundamentals. Unfortunately, in Australia, and I suspect other parts of the world as well, there are thousands of SMEs who are operating without these foundations in place. Why? Many small businesses are stretched thin. They make decisions without meaningful data. They try to navigate cash flow difficulties without understanding the consequences. And they purchase new assets without really thinking of the consequences. Could they have bought it another way? Do they really need it? Could they have hired that bit of equipment? I come across someone once who bought a piece of equipment that was going to be used for about 1 week a year, that was readily available for hire, but he wanted to be ready to use that machine when he needed to use it, which was basically a seasonal activity. And the cost was quite considerable. And when I got involved with the business, I was there because there were cash flow difficulties. I'd been asked by the accountant to come in and have a look at the business. And I said, can I have a look at your recent capital expenditure? What have you been spending money on? And saw this huge amount of money. And I said, well, how's this machine contributing to your bottom line? And I got told it saved hiring a machine. And how long do you need it for? I knew he fell over when he said a week a year. I said, oh, you mean a month? No, a week a year. And isn't there any hire businesses around that you could have hired it from? Oh, yes, but one of my competitors might have wanted it that week, was the answer. I think that it could have been managed. So there's plenty of missed opportunities, mounting stress, and businesses that stall when they should be scaling up. As an accountant, you may or may not be aware of a lot of these dramas. Because if you've been concentrating on the preparation of an annual set of accounts and a tax return, and virtually having no contact with the client during the year, you're probably not aware that these dramas are being played out, probably with more than one of your clients. So let's take a core look at some of the key infrastructure, the key systems that I believe are essential. And it's in your hands to help your client have these systems and get the benefit. Because if you guide your clients to establish the correct systems and practices early, you're not just solving problems, you're helping your client build a bigger and successful business that will be resilient to the challenges that we all know come at us from all angles. Seems like all the time. And the first key area is cash flow. We all know it's essential, but Are we really monitoring it? It's a lifeline to business success. But they need cash flow forecasts, and they need to be realistically prepared based on budgets, not just someone sitting down and getting a piece of paper and trying to work out cash flow. You need to go back to the source documents. And this is why these need to be implemented. So without a forecast, without a budget of an individual operation, sales, expenses, gross profit percentage, what's the wages? What's the wages percentage? How does all these percentages, these key performance indicators, compare to what's occurred previously? What's the debtors' days outstanding currently? What do you think it could be realistic? And if it's currently sitting on 50 days, I think you're kidding yourself saying it's going to come back to 30 days within 6 weeks. That doesn't happen in the real world. It might happen in some sort of financial projection in dream time, but it won't happen. So with some proper forecasts that your client then understands, they've sat down with you, you've worked your way through them, they build up their own confidence that they're in greater control of what's happening. And that key important figure of debtors' days outstanding should be being calculated at least once a month so that your client can look at it. We were 50, we've now brought it down to 47 days. That's great. Let's keep on doing it. And a lot of that improvement can come through changes in the system within your client's business. Really nothing to do with their customers, because customers won't pay till they receive an accurate invoice. That's the first. And they need to receive that as soon as possible. Not at the end of a month, as soon as possible after the transaction's been concluded, so that your customer can go through and say, yeah, we got that, and that's the price they quoted me, and the extensions are right, that's ready for payment. That's important. It's when these things drag out 3, 4, 5 weeks after the services were rendered or the product was delivered that problems occur, because it's a bit of an attitude amongst the customer then. Well, if they're not serious enough to get all this stuff out to us promptly, well, we needn't be too worried about when we make payment. And then the next thing to let your client do is to contact the client when the tax invoice is due for payment. And for goodness sake, please make sure that they have clearly stamped on the tax invoice the due date for payment in accordance with your client's stipulated payment terms. So if they're 30 days, it's 30 days from the date that's been stamped on the tax invoice. So if it's the 9th of this month, it's the 9th of the following month that invoice is due for payment. Nothing to do with month ends or anything. That's when the tax invoice is due for payment. So this is focusing on what matters to help your clients run their businesses more effectively, because there's then a great chance that tax invoice will get paid, and it will be improved significantly more if there's a reminder, email or phone call, or some sort of message that goes to the customer 3 or 4 days before the due date, just a friendly reminder that you have a tax invoice due for payment in 4 days' time. Alerts a lot of people. It won't stir all of them. The habitual slow payer probably won't react to that, and your client needs to sort that out. They need to decide whether they want to continue to trade with that customer. If they really did a separate profit and loss account on their dealing with that customer, are they making money out of it? How much time has been spent in following them up? Put those wages and on costs, the phone calls and whatever else, against the gross profit they earned from that client, and sometimes they'll reach a very good business decision. Let's cease trading with this person, get the payments they currently owe us, and then close their account. so we can have our people concentrating on the customers that do pay us on the due date for payments, not muck us around for months. Business plans are definitely more than a document. I hope that any of you watching this who are accountants and bookkeepers don't go off and prepare a business plan in your back office and give it to the client and tell them that's their business plan and it's been a copy of a previous one that you might have prepared for someone else. That is not the way to prepare a business plan, because it's got no bearing on what's really happening in your client's business. And more importantly, there is no ownership by the client or the leadership team who should be implementing it. The business plan is not a document prepared just for the bank. Definitely not. It's a document prepared to express the views, the belief of the leadership team, including the owner, the client, the managing director, whichever title that person has. And I think it's very important to be having your reviews, discussions with the leadership team around the table. In ESS BIZTOOLS, we've got 40-odd questionnaires that you can use to discuss various issues so that systems are established. But you need to be getting your client's leadership team to commit, because they need ownership of this document, because otherwise it won't work. And at the end of the process, and you've gone away and jotted down what they was going to say, put it into a document, taken it back, get their approval, they understand that process. And at the end, I'd be asking them to sign the document. This is the document adopted by the leadership team, or by whatever name they've got, the management team, the key people in the organisation, because they're the ones who are going to have to sweat through the torture of running a business, the challenges, the disappointments. And there will be disappointments. Running a business is not easy. And quite frankly, it wasn't meant to be easy. But we have, as a profession, have a great role to play to help these clients through this process. So please make the business plan a very important document that should be at least significantly reviewed every year, so that it can be utilised throughout the year. And part of that process is the rhythm of meetings. You know, some people, I think, laugh at me when I ask them what their rhythm of meetings is. Oh, whenever we feel like it. But whenever we feel like it's talking about the football or the cricket. This is serious. This is business. Daily, weekly, monthly. There needs to be a rhythm. Large public companies do this. Some of you would have heard the various podcasts and interviews that I performed with Andrew Geddes, well-known accountancy industry trainer, one of the founders of the Financial Management Research Centre at the University of New England 40-odd years ago. But in more recent time, chair for 10 years of Green Cross Limited, a company which became a top 200 ASX company. And Andrew talked about the rhythm of meetings within Green Cross. Daily, weekly, monthly. Daily, 5 to 10 minutes. What went wrong yesterday? Nothing went wrong. That's great. Let's get on with it. But is there a crucial thing to be done today that others in the leadership team need to be aware of, know about it, reminded about it, and then get on with things? And then backed up by like a daily report that's just on a one-pager, which might have things as basic as, well, how much money's in the bank? What's the amount we're going to collect from debtors this week, we think or hope? And what are the creditors that have got to get paid this week? It really highlights to the leadership team if there's problems on collecting money to pay the bills. Then we got the weekly meetings. Now, the real purpose of the weekly meeting is to review the weekly performance and budget variance report. In other words, the profitability report. What's that showing us for each operation that's conducted by the business? What went wrong? What activity didn't meet expectation? What's being done about it to find out what the problem was? This is real management, being able to dig down into the problem immediately. Within 48 hours of the end of the trading week, Saturday or Sunday normally, being able to start digging down to say what went wrong. We expected a gross profit percentage of 38%, but we only got 22%. There's got to be a problem. It could have been mathematical. It could have been the key stock didn't turn up. It could have been that someone didn't bother doing the stock take and just plucked the figure out of the air and they've been shown up. They've been caught. Or it could have been fraud. And there's probably other reasons as well. But you need to know it so you fixed it. The real problem is that if it's not fixed, it could continue for every other week of the year. And if it's fraud, that could be costing a lot of money. But if there's a miscalculation going on, it's also costing a lot of money because the goods are going out at the wrong price. That's why the gross profit percentage is not right, not what was expected. The key performance indicators and business metrics are vital to helping your clients run their businesses. And the best forum to bring them to is to the weekly meeting of the leadership team. And then on a monthly basis, you've got looking at the monthly financial accounts and other issues confronting the business. That's the discipline of the meeting. Someone's taking the minutes. There's an action plan. Everyone's getting it. It's in the leadership team. And similar meetings should be programmed in the sections of the business so that those people are kept informed. Running a business is not just a matter of ticking forms. You need to guide your SME clients through the process to build the solid foundations that will enable them to scale up their business if that's what they want to do. But at the very least, you want them to survive in business, survive and then thrive in business. And then they can decide whether they really want to scale up in their business. So your role is to give your client confidence because you're there to answer the financial questions and to review and investigate. Now, this is what happens in the big end of town. And this is what's happening with some of your clients' competitors who are a bit larger than what they are, who can afford a full-time accountant or are affording a virtual CFO service. Today, I was talking to a chartered accountant, only a young fella, who tells me that his workflow works out 70% of his income is coming from virtual chief financial officer services and 30% from taxation work, 70% from advisory services work. He's working as a chief financial officer. One day a week for one client, one day for another type activity. He's got the systems worked out, his communication, he's on call. Even when he's not there, he can still be contacted if there's a problem. He's analysed the systems, he's prepared budgets and cash flow forecasts. That's real accounting work. How many of your clients are you supplying that service to? Because the issue for those of you who are running bigger accounting firms is that there will be competitors emerging out there who are also chartered accountants or CPAs who will be setting up very small operations as far as manpower is concerned and looking to service clientele. So you will still retain the tax work because I think most of them would prefer just to do the accounting CFO role in any case. But if you had to look forward as to what might be the situation in the next 5 years, we've had all the forecasts from the former tax commissioner, Chris Jordan, who in an earlier life was a partner at KPMG, so he understood accounting, admittedly in a big four firm rather than what most of the people watching this podcast will be, but nevertheless understood accounting. He said there's significant changes going to occur. and that we all had to become the trusted advisor. Well, that's the mantle that I've worn for many years. I want you all to be adopting it as well, so that we're really offering that service. And if you have decided as a firm that you don't want to go down advisory service, that's all right. But I hope you, in 5 years' time, you agree that you made the right decision, because I've got my doubts. Sticking with tax all the time. I'd like to see every firm in Australia adopt a strategy of a target of 50-50. 50% taxation and advice, and 50% from advisory services. So that's my overview for you today. Please think about it. SMEs really need assistance. They need someone to communicate with, to talk to run ideas past. What do you think about this? You probably heard me say before, but I was the CFO and company secretary of a listed public company. And the what if questions that I seem to get all day, nearly every day, from the CEO, some of the directors, and other members of the leadership team, really kept me on my toes, and my team on our toes, in answering those questions. I have a question for you. Who does your client go and ask questions relative to what they're doing in their business? Who do they ask the questions that woke them up at 3 a.m? Over the years, I've told my clients to write those questions down and to ring me at 7 a.m. Most of them agree to do that. And it's amazing the questions you get asked. But that's the role I think we've got to play to help our clients. They need to have accountants to be answering their questions, because it's not only CEOs of listed public companies that have questions. When you think about it, the CEO of a listed public company is surrounded by a leadership team. In our case, we had 12 people on that leadership team, including me. How big's the leadership team of your key SME clients? And is there an accounting brain in there, an accounting person? And I think that accounting person obviously should be you or someone from your firm. You're the accountants for the firm. And in some cases, your client might not have sat down and specifically asked you to supply this service to them. That's because they've observed accountants for years and said, well, accountants really don't get involved in any of this. Yet if we want to go and work for a big company, we can do so. And it's amazing the packages that some of those big companies pay accounting trained people to do for them, because they know they need them to run their businesses. We just need to make sure that our SMEs know that you can help them. And then I believe many of them will be hiring. Just as the example I gave you of the young chartered accountant that I interviewed today. 3 quite large SMEs have hired him as their virtual chief financial officer. Now, I gathered the way he was talking to me, he actually goes to their offices and talks to them, does his work, does other work in his own premises. Some people will be doing this by delivering it as virtual service and only occasionally visiting offices. You work it out with your clients, but it's a great service for accountants to supply. So if you want to know more information about how we can assist you to deliver these services with our extensive range of packages, of checklists, videos to give you guidance, procedure control forms to assist you in the delivery, backed up by our monthly Business Plus newsletter, which you can badge to go to your clients, which has a series of articles in it that are encouraging clients to say, gee, I've got to talk to John, my accountant, about this and see if he can analyse my debtors' days outstanding. I don't even know how to calculate it. Some SMEs have told me that have been in business for a long time. That's the challenge, I think, for accountants. We need to create these systems to help our SMEs survive, and ESS BizTools can supply the packages to assist you to deliver those services. Please go to our website, www.essbiztools.com.au. Have a look at it. And if you want to have some further information from me, please send me an email, peter@essbiztools.com.au, and I will gladly set up a complimentary 40-minute Zoom meeting where we can go through, have a look at what your firm's structure is, what services you are supplying, where are your clients, what are their needs, and we can give you an outline of the package within ESS BizTools or the individual components within ESS BizTools. If you only need 3 or 4 of our components, you don't have to take our full packages. We'll negotiate a deal whereby you can get hold of the ones that you really need. That might be research and development. It might be capital raising as a crowdsourced funding equity raising company. Or it might be the chief financial officer's duties. If that's what you need, we can sell you those subscriptions on an individual package basis. I look forward to hearing from you. Stay safe. Have a great day. Goodbye.